What's up everyone, it's Caddy with MoneyVest. So in this video, I wanted to go over Endava stock, ticker symbol DAVA. This is a company that a lot of you guys have been asking for an updated analysis, given the fact that it is down quite a bit from its all-time high, selling off over 80%, back down to near all-time lows. Once again, despite being a very profitable company that has very high margins and expected growth as well. So there could be a huge opportunity brewing here, because this is one of the few companies that I was able to find. I've done videos on this stock before, but again, one of the few companies that has excellent fundamentals and yet continues to get hammered by the market. So hope you all enjoyed this video and find it helpful. Make sure that you drop a like and subscribe to the channel if you're just joining us for the first time. I posted a free public video going over and introducing our MoneyVest platform. You can watch this video on our Patreon. It's open to the entire world. You will have to join as a free member and you can watch this video. And of course, if you want access to the entire platform once we do the beta launch, that's going to be available also on July 8th, 2024. All you have to do is sign up with a 51% discount. That's a special price that we're offering right now for all the early adopters for the MoneyVest platform. And of course, you'll be locked at that price. And we're going to be adding more features and functionality over time for this platform as well. So again, link's going to be down below. We'd love to have you on board. First things first, let's talk a little bit about Endava. So they're actually based out of London, the United Kingdom. So they are a company that's based out of England, and Endava is a provider of cloud transformation, software engineering, technology consulting, and test automation services. And the company offers application development and management, digital media testing, infrastructure management, and cloud services. Endava's major clients are Concardis, Polinati, Beasley, RSA, Robobank, WorldPlay in payments and financial services. Adobe is also there. Zeiss and Maersk. It's also providing 24/7 technical support for business critical applications and digital services. Serves financial services, retail and consumer goods, and telecommunication, healthcare, media, and technology industries as well. So when it comes to the company's fundamentals, let's come over to our very own MoneyVest platform. They've got an M score of 3.74 out of 5. This is, again, very strong, very good. Now, one thing I do want to point out is that since this is a company based out of London, so based out of England, the fundamentals right now are not in US dollars. So the data provider that we have, FinHub, we're still working on creating a currency layer from an API called Currency API, so that all the ADRs, which are American Depository Receipts, get converted from their local currency over to US dollars. So for example, the stock price is correct at $29.24, because if you come over to the price of Endava, $29.24, that's exactly where it's trading. But when it comes to the fundamentals, you'll notice that, again, the numbers are in USD at almost $955 million in revenue as of 2023, but of course we have that at $794 because of the discrepancy. So right now we're working on that. By the time we get to launch, this will be fixed, where this is going to get converted into US dollars. Right now that's 794 million pounds, which needs to be converted into USD, which is almost $1 billion. So that's something that I wanted to address and make sure that everybody understands that we are working on ADRs, since Endava is an ADR, it's an American Depository Receipt. As a result, this is a stock that, again, along with this one and Neo and Alibaba and a lot of other companies that are foreign companies listed on U.S. exchanges, are going to have their local currencies that need to be converted into U.S. dollars. But the bottom line is that we're really here to understand and analyze the overall growth, whether it's U.S. dollars or British pounds. The bottom line is the fundamentals and how well the company is doing. So this right here is the overall revenues, consistent growth across the board, gross profit, operating income, net income, whatever you want to plot on this platform, you can do that. And that's, again, showing you very nice consistent growth here for the company across the board on many metrics. If you come take a look at margins as well, gross margins are coming down slightly, I would say, although they have increased, but it does say a little bit more on the compressing side to 32.23% in 2023. That's slightly down from the average of the last 7 years, but overall still very strong. And of course, we got operating margins, net margins, EBITDA margins, everything is expanding right now, including the free cash flow margins as well. I mean, gross margins are the only ones that have slightly come down, but everything else is higher than where it was about 7 or 8 years ago. When it comes to some of the efficiency metrics, so again, return on assets efficient, return on equity, return on invested capital, return on capital employed, everything is efficient for the business. CapEx as a percentage of revenue, stable. Operating leverage, stable. Stock-based compensation as a percentage of revenue is low. Stock-based compensation as a percentage of operating cash flow and free cash flow is a little bit higher at close to over 20, 25, 28%. So that perhaps is the only one that is somewhat inefficient or highly inefficient for the business. And it does also have a pretty strong balance sheet. So if you come over here, if you remove for everything on this sort of chart and we come down to the balance sheet and just look at the cash, the debt, they're both increasing and improving, but cash at a much faster rate at over 44% versus debt, which is also up 23%. But nonetheless, the company's got negative net debt, and that's exactly what we want to see because the company's got more cash than debt on the balance sheet as well. When it comes to some of the other metrics, so current ratio is well over 2 on average, 2.87 as of 2023. Debt to free cash flow also really low at under 1. Total assets do exceed total liabilities. Total assets also do exceed total debt. We got solvency ratio that is 64%, incredibly high. But goodwill as a percentage of assets is also very high at almost 40%. One more thing I want to point out is the shares outstanding that has also increased a little bit. So from about 53 million shares to now sitting at almost 59 million shares. So it has obviously increased during that time period in the last 7 years. And then of course, finally coming down to valuation, it is trading at I would say a bit of a premium to somewhat cheap valuation. We're going to take a look at that in just a minute, looking at the forecast and of course the projected earnings as well. But right now, 2023 basis a little bit over 34. But if you come over to fundamental analysis and under ratios, you'll get a bit of a sense of what the forward earnings multiple at just under 29 for the company, and a trailing is a little bit over 40 as well. So again, 28, 29, not terrible for a company that has margins. That's quite reasonable. And again, margins are sitting well over 21% on a trailing basis. Operating margins, net margins have come down. I think that's one of the reasons why the company's selling off in the first place, is that if you go over to 16 quarters worth of numbers, revenues have now started to stabilize, as you can see over here. And if I start plotting for, let's say, gross profit, operating profits, and net income as well, you'll start to see a very similar trend where the company kind of peaked in December of 2022, although the high or the top for the stock price was much before that. This was back in December of 2021, so exactly 1 year prior to the topping in fundamentals for the company. And since then, it's just been coming down, especially if you remove for revenue. You'll take a look, gross profit has really accelerated to the downside significantly, and now, of course, losses coming in for the company with operating income and net income also accelerating to the downside very, very rapidly. So you can see that sort of symbol, which is very similar to the stock price, right? It goes up and then it comes right back down because the quarter over quarter numbers are really declining. And of course, we're starting to see that the company's turning the corner towards net losses as well. So that's one of the reasons why the stock has been performing so poorly, is because the market's been forecasting. Since the markets are forward looking, they've been looking at these numbers and they've been essentially forecasting, okay, this is what the profitability looks like in the future quarters, and as a result, everybody was selling off Endava stock. And again, this is exactly what the stock price looks at, right? So this is exactly what the stock price also looks like, similar to their trend in overall net losses. And you can see on the quarterly report over here as well, and how they have just gone down to negative 1% in net margins. As you can see, the net loss of about 1.7 million pounds. Now, coming over to some of the other numbers here, so analyst estimates wise, we've got a buy rating with even the lowest target sitting higher than the price itself at $31.31, average at $44, and the high price target of $69 a share. And the future forecast is pretty strong. So we're looking at 2030 earnings per share of $4.57, which brings us to a forward price earnings multiple of about 6, and that's a compounded annual growth rate of just under 16% on a 7-year basis for the company. And sales also expected to grow by almost 12.5% to 13% for the business by 2030, 2031, increasing from 800 pounds to well over 2.1 billion pounds for the company as well. So if you come over to some of the expectations for the future, so this is a company that, again, if you come over to the fundamental analysis and I simply go over the most recent quarter, and let's go over to the balance sheet because I want to plot for cash and let's plot for long-term debt for the company as well. So current portion of long-term debt, and then of course long-term debt as well. You'll notice that the company's got, again, plenty of cash relative to the current portion of long-term debt and long-term debt as well. So the company's got a pretty stable and pretty strong, pretty consistent balance sheet. Margins are stable. Revenue is growing. However, recent quarter-wise profitability is taking a hit for this business. And as a result, we're starting to see a pretty significant sell-off in the stock price, now pretty much trading back down to where it was before the pandemic, right? So these are levels from back in 2019 at around $24, $25. Then it basically rallied over 600%. And then since, it's just been selling off over 85%. Again, very, very oversold on the RSI. If you come over to this chart, on the monthly time frame, again, you'll see incredibly oversold on the RSI and on the MACD as well, and pretty much coming down to that support that we identified at close to $21 to $20 a share. Pretty much traded down to that level. So that is the 52-week low. And the low for this month was about 24.51. So if you come back over to the Analyzer tab, and once again, going back over to the Money Invest metrics, so let's say that we are analyzing for the last 5 years worth of data, you'll notice that the net income has grown by over 37% growth rate, and the last 5 years worth of average for price to earnings is trading at 34.5. I'm not going to go with those numbers because I know that the future expectations for earnings are 16%. So let's say that the 16% is going to be that growth rate. And by the way, when it comes to fundamental analysis here, let's just go over to quarterly numbers. What you will notice is the company's net income, of course, has come down or has been increasing. So 94 million pounds. So that has, of course, seen significant increase in the last 4 years for the company. But if you come over to quarterly data, you can see the significant decline. So that's why there are expectations that, okay, this year the company may decline 28.4% in earnings year over year. So the expectations are for $1.16 for 2024. So yes, this year is going to be low, but over the long term, it's still going to rebound. That's what the analysts are expecting for, that it's going to rebound. And of course, by 2030, it's going to be increasing at almost 16% CAGR over the long term. So what we're going to do is, again, we're going to do an autofill. We're going to plan for 7 years, and I'm going to plug in about a 16% growth rate with the P multiple of, let's say, 20, right? So not 25 or 28 or 32 where it's trading at the moment, but 20. Share dilution is going to stay stagnant at, let's say, 1.5%. 10% margin of safety, 12% discount rate. And if you hit calculate, we're looking at a stock that is significantly undervalued at almost 60% undervalued with a fair value of $46 per share and a future target price of $114 per share, which is going to be an increase of about, I think, so 30 to 60 to almost 120. So that's a 200% increase expected, or 3x from these current levels for the company, or might be 4x. From these current levels. Yeah, so 30 times 4 is about $120. So that's what the expectation would be for this business. And you can take a look. If you go a little bit lower, so right now it's trading somewhere over here, $22 to $25. And the market's now only pricing in for a 10% growth rate and giving this company a very, very low price to earnings multiple of 14 to 16. So that's exactly right. If I were to match today's market price with the fair value, so let's go 10% and let's go 16 over here. And if you hit calculate now, now we're looking at, $25 in fair value, only 12% overvalued. So that means the markets are heavily discounting Endava for its long-term potential, only expecting a 10% CAGR for earnings over 7 years and a P multiple of only 16. And now it's trading at its fair value with a future target price of over $63 a share. And even then, you're getting about 100% or basically a double up on this stock over 7 years. So let me know your thoughts down in the comment section below. This is a company that, again, if they're able to turn the corner back towards profitability, because this is one of the reasons why it is selling off in the first place, because both their operating income and net income has been selling off. So you can see quarter over quarter, significant decline. And if they're able to turn the corner and have a very brutal 2024, but again, bounce back in 2025 and beyond, then there is huge potential, in my opinion, for this company that continues to sell off despite having very, very good fundamentals and very good numbers for the company over the long term. So let me know your thoughts down in the comment section below. From a technical analysis standpoint, we got a very, very strong support sitting right over here in the low 20s. Again, you can see that that's exactly where it was back in 2018 prior to the IPO. Then had a huge, 700% rally, then sold off almost 90%, and it's now back at that support level once again. That's pretty much the lows from pandemic for Endava. So hope you all enjoyed this video, found it helpful. Make sure that you drop a like and subscribe to the channel. And as always, happy investing, and I'll see you all in the next video.